Welcome to Loup TV. I'm your host, Gene Munster, along with Loup's Doug Clinton. Our topic today is the Contrarian Mindset. For those of you who've been judiciously doing your reading along, you'll know that Doug has written a lot about the Contrarian Mindset over the last few months. For those of you who haven't, which may include some of Loup TV viewers, we wanted to give you a quick way to get up to speed on what Doug's thinking. A preface here before I bring you in, Doug, is as we talk about this contrarian mindset in our investment team meetings and Loup's investment strategy, as we frame that in, and then as we talk about you publishing it, there's one side of me that says we're giving away our trade secrets, letting everybody know how we approach investing in a different way. And I guess this is a world of free information, so we need to embrace it. So here we are, giving away the intellectual property of Loup, and take it away, Doug. What do we need to know about a 101 level contrarian mindset?
Well, I'll do the shameless promotional plug. You can read what I write about contrarianism at contrarianmindset.com. The basis of the whole experiment, everything I write, is a pretty simple idea that is, I think, something a lot of good investors realize, which is to generate extraordinary returns, you have to be non-consensus and right. And this is something that Howard Marks, I think it's the first time I ever read it in those explicit terms. He was the person who wrote it, and that was 27, 28 years ago, I think, in a memo from 1993. And so that idea, the idea of being non-consensus but right as the only way to generate extraordinary returns, that's not a new idea, but kind of the deep dive that I've kind of personally done in what does it mean to be contrarian, how do you come up with contrarian ideas, that is what the blog is all about. And it's inspired by a lot of the things we talk about and do at Loop to try to really dig into those non-consensus ideas.
When we think about taking that approach, clearly this is not momentum type of investing. How would you frame in a nutshell, contrarian mindset?
I mean, just starting with the basic Marx insight, the idea is if you follow consensus, if you do what the rest of the market does, by definition, you can only get the same returns as the market. You can't outperform the market if you follow the market. And so the only thing you can do is do something different. If you do something different and you're wrong, your returns are going to be terrible. If you do something different and you're right, your returns are superior. How do you come up with contrarian ideas, I think, is the natural question. And my most recent post, I sort of went through a mental exercise of sort of how that works across three different parameters. One is, will this idea happen? Start with sort of the prediction itself about what you think is going to happen. And is that fundamentally different from the market? So you can have a prediction. That prediction may be in line with the market. That prediction may be different than what the market thinks, or the market, it may be such a new and novel prediction that the market has no opinion. And so that's your first layer of being non-consensus, is how can you be different on the prediction? The second is the timing. So is it going to happen sooner than the market thinks, in line with what the market thinks, later than the market thinks? And then the third layer is the magnitude. So is it going to be, this huge, massive outcome that the market doesn't realize? Is it going to be, again, in line with maybe what the market thinks, or could it be smaller than the market thinks? When you put all of that together, you can kind of determine whether or not you really have an idea that's sufficiently different than the market to generate those outsized returns.
You do that exercise, you go through the three steps, and as we've gone through it internally, sometimes we debate what ultimately is a consensus idea and non-consensus idea. I'll give you an example. We've recently talked about flying electric aircraft, and some of the valuations out there are pretty hefty. But at the same time, the concept about electric flying planes at the most basic level feels like it's contrarian, but the prices that some of these companies are trading at are high, which would say that it's consensus. How do you sift through those two factors?
It's definitely more art than science when you get into what is and isn't consensus. I mean, the thing we always talk about internally is that price. I mean, price is a reflection of market consensus, sort of by definition. So price should tell you a lot about what the market believes. I'll talk about the flying airplane thing in a second, but I'll use a slightly different example first, which is electric vehicles. I think that to me seems much more obvious that the belief in EVs in the market is consensus. I mean, you look at the valuation of almost any stock tied to electric vehicles, and it is much more, aggressive than the Fords and the GMs. And it's because the market thinks that EVs are the future, and they're probably going to be right. And so the point that I would make there is, okay, the market believes electric vehicles are consensus. So your first order decision is, well, do you agree or disagree with EVs are the future? Most people are going to agree. So you're in line with consensus so far. Okay, how long is it going to take to happen? I think everybody is probably on the same page that it's starting to happen already. And I think within 5 years, most people probably think, and I think the market thinks too, that EVs will start to make a much more meaningful part of the total vehicle sold. And then maybe 10 years, we might start to see that being the majority. And then third is, how big can it be, right? And this is maybe where the debate happens. In my opinion, I think the market probably thinks EVs are as big as the gas car market, roughly, if you think about just total vehicles for sale potential.
Yes.
The counter argument might be, well, EVs create some new opportunity, maybe more cars can be sold, maybe they're higher margin. And so a contrarian might argue that the EV opportunity is way bigger than people think. And so even though these stocks are expensive, they might still be good investments. And so that's how I would think about going through those three layers. Going back to the flying planes, what I think is interesting there is, I mean, you've got several of these companies now that have gone public through SPAC, multi-billion-dollar valuations, but have yet to achieve any real revenue. It's just you're betting on IP right now. And so what I would say is, if you're trying to determine is this or isn't this consensus, what you have to do is you sort of say, okay, well, what does the market seem like it's thinking? And then what could the opportunity ultimately be? You go to that sort of magnitude component, and then how far away is it? So essentially, it becomes a built-in component to your modeling, where you say, this is how big the opportunity can be. This is how much I have to discount it back to the present, and say, okay, well, at this level of discounting and this big of a market, what does that say about market cap versus what the ultimate opportunity could be? And that, I think, is probably the most scientific way to at least determine whether or not flying cars are consensus.
Remember that wonderful intersection between technology and liberal arts that Steve Jobs showed when they announced the iPad? That's kind of what we're doing here today. When you put the substance together, it comes out in the form of, at the beginning of this year, Doug made a prediction and had, as part of the Loup Frontier Tech ETF, had Ford in there as a tech company, the Mach E coming out, the F-150, the most popular vehicle in America, going to electric next year. And Doug's prediction was that Ford would outperform Tesla. And year to date, Tesla is down like 7, 8, 9%, something like that. And Ford is up about 40%, 40%, all on these disruptive themes that we talked about. Great example of your work coming to fruition. Of course, I recommend that you read along on your Contrarian blog. And I would just end here with, if you want to know how this stuff comes together, talk about going next level and sharing our trade secrets here. But Doug has days which are blocked off. We're not going to tell you which day it is, but there's a day where it's blocked off and he basically thinks. Reminds me of my pops. He'd say the most valuable person in an organization is the one that stays in that office and comes up with one incredible idea per year that makes the firm their entire profits. Thankfully for Loup, Doug comes up with more than one idea, many more than one ideas per year. And we're delighted to have you on Loup TV and share a little bit about that. Undoubtedly, we're going to talk more about this in the future. Thank you, Doug, for honing my contrarian insights and enlightening us today. On behalf of Doug, Gene, and Loup TV, bye for now.